Hi, I'm Dr. Druv and welcome to my YouTube channel. This is a channel not on medicine, but all the other aspects related to our medicine lives. Today, we're going to cover a concept of variable mortgage. So in the previous episodes, we covered amortization and fixed mortgage, but today we're going to cover variable mortgage. So what is a variable mortgage? It is a type of mortgage that has an interest rate that can fluctuate over time, as we're seeing right now, based on prime in Canada. This means that the monthly mortgage payments can change based on the interest rate. Now, one of the main advantages of a variable mortgage is that it typically has a lower interest rate than a fixed rate mortgage. This can result in significant savings for the borrower over the life of the loan. A variable mortgage is divided into two types: a variable rate mortgage and an adjustable rate mortgage. So in a variable rate mortgage, you can see here that the mortgage amount remains the same. However, the principal and interest that you pay may differ as the interest rate changes. So you can see here that as the interest rate rose in 2022 from 3 to 5%, the mortgage payment essentially changed from May to September, where the principal used to be $500 and the interest was $346, as you can see here, and that completely flipped as interest rate was doubling to $200 in principal and $600 in interest. So that's a variable rate mortgage, while as an adjustable rate mortgage is the mortgage amount, essentially the whole mortgage amount changes itself. So you can see here that if you were to take the average 5-year rate of 2000 to 2010 at 3.89%, your mortgage amount would be $3,800. While as the interest rates rose, which happened right now in 2022, to 7%, something like that, your mortgage rose from $3,000 to $5,000. Now, all of these numbers are based on a $800,000 house. Again, the amount of the house purchase or the mortgage amount really doesn't matter. The concept that is needed to be understood here is that a variable rate mortgage, the mortgage amount remains the same, but the principal and interest may change and fluctuate. While as in an adjustable rate mortgage, the mortgage amount essentially adjusts to the interest rate. Goes lower if the interest rate goes down, goes higher if the interest rates goes up. And essentially we're taking on that risk, and that's the reason why the interest rates are lower, but we're taking on that risk. And so why is this important for physicians? So for physicians, it's important to understand what type of mortgage to take. Normally, as high income earners, we tend to get reasonable or big houses, and it's important to find out what type of product we're getting. So while it can provide flexibility in managing their finances, as a physician's income can vary depending on their practice, a variable mortgage can help them manage their mortgage payments in a way that works for their current financial situation, or it may not, as our incomes go down due to COVID. As the interest rates go up, then we're paying a higher mortgage amount with a lower income, and so it can create disparities in income and expenses, which change our wealth equation, which is income minus expenses. And so that's why it's important for physicians to understand what they're getting into when they sign the dotted line on a variable mortgage. And how does one go about getting a variable mortgage? And so a physician will need to go through the same process as any other mortgage applicant. This includes providing proof of income, credit history, employment, overall income. Physicians may be able to qualify for special programs called physician mortgages, or rates that are tailored to their profession. It's important to shop around and compare different lenders to find the best mortgage rate and terms. Hopefully, I'll have future videos on a mortgage broker and how they can add value to you in terms of making a decision around mortgages, which is the largest liability, the largest purchase, the largest investment. It's interesting that it's a purchase, investment, and liability all along the same lines, because that's the nature of homes, and depending on the context, things can differ. The one caveat from my own example and story that I can say is that when shopping around for the rate, when you talk to the different mortgage brokers or even lenders, please do not give consent to do a credit check unless you are very sure that you're going to go with that particular bank, because it results in a hard inquiry, which then results in your credit score taking a small hit, so to speak. And if you're doing multiple credit checks just to shop around for the best rate, then that'll cause multiple declines in your credit score. So that's important to know from my own mistake, so to speak. So it's 5 minutes. And so on that note, in conclusion, a variable mortgage can be a great option for physicians if their income is stable, as it can provide flexibility in managing their finances. And if the interest rates go down, great. If the interest rates go up, then it may cause some financial hardships depending on your income and the purchase of your large home. By providing, proof of income, credit history, and employment, physicians can qualify for a variable mortgage and the best rate and terms for their needs. So on that note, hopefully this has added value and information to you. If a few action items, if you like to follow the exact frameworks used by affluent physicians to take back control of their time and money, then check out the link in the description below. I make these videos because my mission is to help 10,000 physicians fight burnout across this world. And it starts with you. And I wish that I had someone when I was building my wealth building journey, like doing multiple lender checks to shop around for the best mortgage rate. Come and join a free community of like-minded physicians full of free resources like cheat sheets, calculators, and everything you need to live your best medicine lives. Thank you for watching. Thank you for doing what you're doing. And by now, don't forget to like, share, and subscribe, and the YouTube algorithm to help other physicians and high-income earners learn these important financial concepts. Take care, and I'll see you in the next episode.